Hey there, tech-savvy investors. Welcome to the Monday edition of Tech Stocks Daily. I'm your host, and we've got a thrilling lineup today that you won't want to miss. From DXC Technology's double dose of legal drama to CrowdStrike's Falcon-fueled turbulence and Zoom's game-changing million-attendee webinars amid Cathie Wood's massive sell-off, we've got all the juicy updates to kickstart your week. Stick around as we dive deep into these wild stock stories. Trust me, you're in for a roller coaster of insights. What's up, tech fans? It's time for your daily dose of tech news with a splash of fun and a whole lot of insight. Today, we've got a drama-filled update on DXC Technology Company. Yep, it's going to be juicier than your grandma's secret apple pie recipe, so buckle up. #, the DXC Technology saga. DXC Technology Company, ticker symbol DXC, has found itself smack dab in the middle of not one, but two back-to-back class action lawsuits. For a company that sounds like it could be the next Iron Man suit, two law firms are saying not so fast, Tony Stark. What's the deal? All right, let's break it down. On August 19, 2024, Levi & Korsinski LLP dropped a bombshell that had all the NASDAQ stock traders' heads spinning. They announced a class action lawsuit against DXC Technology Company, claiming the big guys at DXC have been playing a high-stakes game of smoke and mirrors. Let me spell it out for you. Between May 26, 2021 and May 16, 2024, they alleged that DXC made some seriously misleading statements about their so-called transformation journey. What's a transformation journey, you ask? Think of it like DXC's version of a midlife crisis, but instead of buying a flashy red sports car, they decided they'd rather mislead investors about how successfully they were integrating newly acquired companies and business systems. Ouch. The specifics. Let's dive into the nitty-gritty. Levi & Korsinski claims that DXC concealed crucial information, leading investors to believe that everything was just peachy, while in reality, DXC's integration efforts were, well, less Iron Man and more rusty old robot. They were allegedly delaying costs by deferring restructuring and integration expenses. You can only imagine the plot twist when DXC's CEO finally admitted on May 16, 2024, that the previous integrations were pretty much like using duct tape to fix a sinking ship. Domino effect. Wait, there's more. Hot on the heels of Levi & Korsinski's announcement, Robbins LLP stepped up to the plate on August 18, 2024, loading the bases with their own class action suit. Their complaint pointed a laser focus on two horrifying days for DXC stockholders. First, August 3, 2022, when DXC embarrassingly post-gave first quarter results. The stock plummeted by, you guessed it, 17% from 31.52 to 26.15. And then, the knockout punch, May 16, 2024. The CEO's big reveal led to another gut-wrenching 17% dip from $19.88 to $16.52. What's next? If you sat through the twists and turns of this corporate soap opera and found yourself clutching DXC shares, you'd better mark October 1st, 2024 on your calendar. That's the deadline to ask the court to appoint you as lead plaintiff. And don't worry, Levi & Korsinski have been kind enough to inform you that jumping in won't cost out-of-pocket expenses. So there you have it, folks. From alleged misleading statements to shareholder heartbreak, DXC Technology's legal troubles are putting the technical in technical difficulties. If you're an investor or just love a good drama-filled business story, keep your eyes glued for updates on this saga. Trust me, it's far from over. Oh folks, we have a spicy one today. CrowdStrike Holdings Inc., the cybersecurity juggernaut famously guarding your data with their Falcon software, just flew into some major turbulence. Buckle up, because we're diving deep into the nuts and bolts of today's tech buzz that's sending ripples through the NASDAQ. So what's the fuss all about? CrowdStrike is embroiled in not just one, but two class action lawsuits. Yeah, if you're an investor or a security enthusiast, you might want to lean in. Let's start with the lawsuit from Levi & Korsinski LLP. The firm is alerting investors about allegations that CrowdStrike misled them by making false statements and concealing some dangerous inefficiencies. According to the complaint, between November 29, 2023 and July 29, 2024, CrowdStrike allegedly deployed updates to its Falcon software without proper testing. This rushed process led to a significant risk of major outages. And guess what? Those outages actually happened, causing severe reputational harm and legal risks to the company. As a result, their stock was trading at artificially inflated prices. Levi & Korsinski are encouraging investors who suffered financial losses during this period to step forward by September 30, 2024, to be considered as lead plaintiffs. They're promising no out-of-pocket costs for participants, so if you've been on this turbulent ride, you might want to make that call. Now on to the second lawsuit by Robbins LLP. This is where things get even juicier. Robbins LLP, another heavyweight in shareholder rights litigation, is rallying CrowdStrike investors who bought in during the same time frame. The allegations echo those of the other lawsuit, but with more dramatic revelations. Between November 29, 2023 and July 29, 2024, the Falcon platform was hyped as the knight in shining armor of cybersecurity, validated, tested, and certified. However, on July 19, 2024, an update to Falcon threw a wrench, and not a small one, into the gears, causing massive outages for millions of Microsoft Windows users. The scope was jaw-dropping, affecting financial institutions, government agencies, and corporations alike, and leaving them vulnerable to potential hacking. What's the fallout? The company's shares plummeted like a rock from 343.5 cents to 304.96 on July 19th and continued the downward spiral to 230.64 cents by July 30th. Ouch. Robbins LLP is urging investors to file as lead plaintiffs by the same September 30th, 2024 deadline. They emphasize that there are no fees or expenses for representation, only benefits if they win. Both lawsuits are a big deal not just for CrowdStrike, but for the broader cybersecurity and tech investment landscape. It's a harsh reminder that in the realm of digital defense, rushing things can lead to enormous repercussions. So, if you're a shareholder feeling like you've been left watching your stock plummet, these lawsuits could be a chance to recoup some losses and hold the company accountable. Be sure to check out Levi and Korsinski and Robbins LLP if you're looking to dive deeper into this legal storm cloud hanging over CrowdStrike. Stay tuned, folks, because this story is evolving quickly, and it's surely going to be one wild ride. All right, tech enthusiasts, hold on to your webcams because today we're diving deep into Zoom. Yes, the iconic video conferencing giant that transformed our work-from-home lives. Zoom has been in the headlines twice today, and it's a fascinating roller coaster ride. First off, brace yourselves. Cathie Wood's ARK Invest just sold off a whopping 161,836 shares of Zoom stock. That's about $9.1 million worth of shares, folks. This move comes right ahead of Zoom's second quarter earnings report due on August 21st. Now, what might raise your eyebrows is that Zoom's stock price has already dipped nearly 14% year-to-date. Wall Street's guesstimating $1.21 in EPS and revenue chugging along at $1.1 billion. But there's good news. Zoom has a habit of smacking those expectations out of the park for 7 consecutive quarters. Can they continue the streak? We'll have to wait and see. On the technical front, the scene is spicy. Zoom stock is dancing above its 5, 20, and 50-day exponential moving averages, showing some short-term bullish flavor. But beware. It's still below the 200-day SMA, indicating some long-term apprehension. Stock's hovering around $60, not too shabby, eh? Yet it's also near its 52-week low. Talk about edge-of-the-seat stuff. Reddit, of course, is a whirlwind of opinions. Some savvy investors are bullish, eyeing strong free cash flow and cost reductions from layoffs. Others, however, throw caution at stiff competitors like Microsoft and Google and whisper about Zoom possibly being a takeover target. Google Zoom? Sure, stranger things have happened. But wait, the plot thickens, even more upbeat. Today, Zoom just flipped the script with a jaw-dropping announcement. Their webinars can now handle up to 1 million attendees. Yup, 1 million attendees. Zoom ain't playing games, folks. They've rolled out single-use webinar options for different crowd sizes, from 10K up to a staggering million. This move could bring about the next paradigm shift in virtual events. Imagine a global summit with speakers from all corners of the earth, engaging with 1 million attendees in real time. The mind boggles. Smita Hashim, Zoom's chief product officer, calls this a revolution in the way organizations can seamlessly connect. With support from Zoom's event services team, these massive webinars are set to be professional and super engaging. Key industry voices like Wayne Kurtzman from IDC believe this could open up new horizons for innovative organizations. From virtual concerts to expansive academic lectures, the sky's the limit. So, where do we stand? ARK Invest's gambit with a huge stock sell-off meets the groundbreaking new product launch. It's a game of high stakes and high rewards. What's your hot take on all this? Are you bullish on Zoom's potential to bounce back? Or do you think Cathie Wood's got a point-jumping ship? Are you excited about the new 1 million attendee webinars? I want to hear your thoughts. Smash that comment section and let's get the discussion rolling. All right, tech enthusiasts, let's zoom in, pun completely intended, on Zoom today and analyze whether we should be buying, selling, or holding those precious shares. Here's the skinny. Cathie Wood's ARK Invest just dumped 161,836 shares of Zoom stock. A cool $9.1 million worth, no biggie, right? And they did it just days before Zoom's second quarter earnings report on August 21st. Now, if you're scratching your head, wondering why Zoom has an almost 14% dip year-to-date, despite their knack for crushing expectations, you're not alone. On the brighter side, Zoom is on a technical mini-high. It's above its 5, 20, and 50-day exponential moving averages, so it's flirting with those short-term bullish vibes. However, it's below the 200-day SMA, telling us long-term caution still lingers over this stock like a rain cloud over a picnic. Let's break down the game changer. Zoom now offers webinars with up to, wait for it, 1 million attendees. Seriously, 1 million bodies in digital seats. Conferences, global summits, virtual concerts, you name it. This launch could make Zoom the virtual hotspot for expansive events. My take, sell. Zoom has strong fundamentals, but with Cathie making that much of an exit move and the stocks floating near their 52-week low, it's a bit of a red flag. Selling could be a safe approach if you want to avoid near-term volatility, especially with heavy competition like Microsoft and Google sniffing around. Buy. If you're bullish on Zoom's innovative moves and think they'll outperform Wall Street's Q2 expectations yet again, then now might be your chance to snag shares at a discount. Plus, the bullish push above shorter-term averages can be your friend here. Hold. If you're already invested and can stomach some ups and downs, maybe holding is your best bet. Watch closely how Zoom's upcoming earnings report and this new product launch play out. My verdict, hold. it's best to watch this turbulent ride play out a bit, at least until the earnings report drops. Weighing ARK Invest's exit and the bullish sign of their technical patterns alongside the new product offers a mixed bag. Equities and complex, high-stakes maneuvers are better watched than jumped on too hastily. But remember, folks, I'm just the messenger here. Always do your own research. Dive into the numbers, read the reports, and consult with your financial advisor. Only you can make the final call on your investments. What do you think? Ready to zoom or zoom out? Let me know in the comments section. What a roller coaster of a day on the tech front, right? From DXC's double whammy of class action lawsuits over some alleged foggy practices in their transformations, to CrowdStrike's Falcon software turbulence, and Zoom's crazy new million-attendee webinar capability amidst Cathie Wood's big stock sell-off, it's been a whirlwind of market news. If you enjoyed this rundown, hit that like button, subscribe for your daily tech bites, and don't forget to share this video with your fellow techies. And hey, swing back by tomorrow for another jam-packed update. Stay savvy, keep innovating,